One of my biggest things was, as an entrepreneur, you really don't want a lot of partners. You might have, you might be in a different place, in your life, and maybe you don't, you might have a different exit strategy, and that's when you own a business, it could be 10, 20, 30 years, whatever it may be. With multifamily, typically we're looking at a 3 to 5 year exit. So
Hmm.
you're not married to the person forever.
Right.
Um, so once I kind of, changed the mindset to partner up with other people, we started to build a lot of momentum over a short period of time. So it's been very exciting.
Welcome to the Wealth Through Real Estate Investing podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and reach the lifestyle you always wanted. And now your host, Dwaine Clarke.
Hello and welcome to the Wealth Through Real Estate Investing podcast. This is your host, Dwaine Clarke, and today we have Gary Lipsky. Gary is a multifamily real estate investor and founder of Break of Day Capital. Gary, thank you so much for joining us on the show. How you doing?
Good. Thanks for having me.
Yeah, I really appreciate it. So we had a little quick chat before pre-show. We know a couple of the same people in the industry. We'd love to learn a little bit more about your background, your story, how you got started. If you kind of detail for us how you got started in real estate and a little bit about your story.
Yeah. So I grew up in New Jersey. Always been an entrepreneur my whole life. As a kid growing up, I was shoveling driveways and doing auto detailing. I started a restaurant delivery service in college, and started one also when I graduated. I co-produced a couple independent films in my 20s. I then started a after-school outdoor ed and leadership development company in Southern California, and we were working with over 9,000 kids daily. And at that time, I was starting to invest in real estate, and I sold that 3 years ago and got into real estate full-time. And it's been something I wanted to do for a while, and but I didn't want to be, just dipping my toe in. I wanted to be full in. So that's why I sold the business. Gave me some runway as far as some cash and some time too, and just dove full into it.
That transition, did you kind of start with something that you're able to buy and manage yourself, or did you just kind of jump into the stuff? And how's that transition look like?
It actually took me a while to figure out what I wanted to do in real estate. There's so many ways to make money, and you go to meetups and you're like, flipping and senior housing and this and that. And in the beginning, you're like, it all sounds great,
Yeah.
so easy and whatnot. So I thought I'd be, doing more flipping when I first started. I had done even my houses that I bought. I always looked at it as a value add. I didn't look at it like I'm going to stay here for the next 50 years.
Mm-hmm.
I bought something that I thought was a good deal. I could put in 20,000, 50,000 and increase the value 150,000, 250,000. And that was for me, my value add training, and how to, for me, a great way to build wealth. So I did get my real estate license locally here. I'm in Manhattan Beach, California. And so I sold, a couple of houses for friends and family. And I just sold a high-end flip recently, but that's really was like a side project.
Mm-hmm.
But I found multifamily, and it was a good fit for me as a business owner and entrepreneur, because that's running a business. It's not, when you've got the small stuff, the 4-plex, even the 12-plex, it's really you, maybe a couple friends of capital. You're doing a lot of this stuff yourself, and once I transitioned up to bigger stuff, I'm relying on a third-party property management company. They handle the bulk of the things. I manage them. We have our weekly calls, but it's running a business, and so it's completely different. It was just a mindset shift, really. And one of my biggest things was, as an entrepreneur, you really don't want a lot of partners, you know. You might have, you know, you might be in a different place, you know, in your life, and maybe you don't, you know, you might have a different exit strategy, and that's you know, when you own a business, it could be 10, 20, 30 years, whatever it may be. With you know, multifamily, typically we're looking at a 3 to 5 year exit, so it's you're not married to the person forever.
Right.
Um, so once I kind of, you know, changed the mindset to partner up with other people, you know, we started to build a lot of momentum over a short period of time. So it's been very exciting.
And then you're, as far as kind of what you guys targeting, you guys are like looking at like larger project, 50 plus units, 100 or whatever and stuff. What marketplace are you guys at
We do
or
have
currently
42
in?
unit. That was one of our first projects. It was a great starter project. We raised $1 million. We'll look to exit that in the spring. That, you know, we had a 5-year business plan, but we're on target to hit our 5-year marks after year 1. So it's doing phenomenal. We just closed on a 128 unit. So the first one is in Tucson. This one's in Phoenix. So much bigger property. We raised 5.7 million on this deal.
Wow.
There was myself and 5 other partners. And, you know, we're looking at different things. We do look at some bigger stuff, 80 plus units, but sometimes we'll look at something smaller that we could be in and out in maybe a year. So that's, you know, that's basically like a flip. But you know, we feel that there's a lot of opportunity there, perhaps some less competition as well. And, you know, we'll still put on longer term debt. You know, we have to be careful on prepayment penalties, but we do feel that there's some opportunity. So we you know, in this type of market where, you know, it's been hot for a while, you've got a lot of people, you know, jumping into multifamily, kind of like a gold rush. So you've got to find areas that maybe that are less competitive, you know, maybe some areas, locations too, that are less competitive to separate yourself from others.
What markets are you guys in now, or because you say you're looking at different markets, what markets are you guys looking at?
Yeah, we're focused on Tucson and Phoenix. You know, Phoenix is in Maricopa County, which has been the fastest growing county in the States for a while. Tucson and Phoenix have both been on the top of gains in market rent increases. We love both of those markets. Great job diversity there too. So, and it's, you know, for LA, it's a really good market to get to. You know, we can get there on a flight within an hour or drive out there in 5 hours if need be. So we spend a lot of time out there. We run a meetup out there as well, my partner and I.
As far as kind of, can you take us through that first syndicated deal? Was that the 42 unit or was the other?
Yeah. So I've invested passively in about 1,500 units. So that was a good way to kind of get my feet wet. I used my retirement money for that. I was a key principal on a friend's deal in Dallas Fort Worth. And so I've invested in quite a few complexes in DFW area. I've done some student housing, some ground up development in LA, but the 42 unit was the first deal that I was a GP on.
And as far as kind of like, you know, because you mentioned like the landscape has changed, it's becoming more competitive and stuff. So do you find it more beneficial to, you know, partnering up, especially if they're in a different market, their boots on the ground, compared to you guys going that whole process of underwriting it and going back and forth that can turn into a possible bid war?
So my partner and I have always, we were the asset managers on the Tucson deal and the Phoenix deal. We prefer to be asset managers versus giving up, you know, control to someone else. We both have a lot of operational experience, so we feel, you know, that's one of our assets that we bring. You know, and we're out there so often that we feel like we're boots on the ground. It's close enough. It's not like if we had a deal in Florida, that'd be another story, or DFW as a sponsor. We would need boots on the ground, but it's close enough where we feel very confident, and we've been very successful so far.
You had mentioned that you guys are doing like meetups and stuff like that. So what besides from that, are you doing other stuff to reach out to get potential investors for your deals?
Yeah, that's one of our biggest goals heading into 2020 is increasing our investor pool. You know, in over, I don't know, let's say 6 months, probably, my investor list went from 300 to 1,000, you know,
Wow.
increased tremendously. And so I run 4 meetups, 3 in LA, 1 in Phoenix. That has helped a lot. We run webinars once a month,
Mm.
and we blast it out on LinkedIn, Facebook, Instagram, and we get a lot of signups that way. And obviously, you know, it takes work. It's, you know, you're providing a lot of content, but it's definitely paid off. We've gotten investors that way. You know, work my network. You know, I go to a lot of real estate conferences, different groups that I'm involved in. I've gotten investors that way, but it's a lot of work. But that's the kind of stuff I like to do. I'm not a 9 to 5. I can't sit behind a desk too long. When we have, you know, you know, so much paperwork on closing a deal, you know, like I start pulling my hair out. It's like, oh, I just need to get out. I don't want to deal with the paperwork. You know,
Mm-hmm.
you know, that's the enjoyment for me is offering opportunities to other people, seeing how I can help them, and you know, getting to know, you know, different people. You know.
I mean, obviously, like LA is California itself is a total different market. I mean, you guys are looking at deals in, you know, Phoenix and Texas and stuff like that. So it's probably, I can imagine, a big attraction for California investors to, you know, have their capital work outside of the state.
Yeah, absolutely. I mean, I know people that are doing quite well here, but you get a lot more for your money outside of the state. It's much more landlord friendly, lower taxes. But there, I mean, you know, there's opportunity everywhere. So it depends where you feel most comfortable in, you know.
And as far as kind of your investor kind of database, is it more, because your offerings, is it more 506c where you're open up the door, or is it more for accredited investors?
We've done 506B so far. We've talked about doing 506Cs. We've had some friends do 506Cs of late, and it certainly is becoming more popular. I could definitely see us doing something in the future, but you know, we have a mixture of both. I'd say for me, probably about 75% are accredited, maybe 25 sophisticated. We, you know, if we did go 506C, then unfortunately some of the sophisticated investors couldn't participate, you know.
hmm Where do you guys see kind of your business moving in the future? Is any other markets that you guys are looking at, more in like Southeast or something like that, or like?
Certainly, I love the Southern Belt. You know, you know, population migration is you know, heading towards the south. It's also you know, Phoenix is a huge migration. A lot of people from the West Coast, Washington and Oregon and California, moving there for cheaper housing. And I read recently Chicago. There's a lot of Chicagoans moving to Phoenix as well.
Mm.
Warm weather.
Oh yeah.
um, but also you've got certainly a lot of other investors competing for the same properties too. And if they're 1031 into, you know, going into a property, they're going to pay more because they have a deadline, and you know, they don't, you know, we're watching out for investors' money. They don't have to worry about that as much. So we've certainly lost out on deals because of that, but there's a good amount of deal flow. We like that area.
Yeah, it's a really good area. I mean, it's a little bit more price per unit, but you know, definitely, like I said, all of the metrics are there, economic wise, and you know, rent growth and everything. It's just an awesome market. I know a couple of investors in that marketplace that are doing very well.
Yeah.
As far as kind of like your, you know, your career kind of transitioning to, you know, syndicator and all that stuff like that, is there any things along the line that you say maybe I could have done a bit differently to scale up faster, or maybe just felt that everything kind of fell in line and worked out perfectly in your favor?
Nah, there's lots of things to do better. Absolutely. Even now, I mean, you know, things have been humming, but there's always room for improvement. You know, you're constantly learning, but that investor database is so important right from the beginning. Talking about what you're doing, wherever you are, and you know, you just, it's not, you're not selling people on what you're doing. You're just telling them what you're doing, and then they get interested. You know, it's
hmm
um, and people are always looking to make money, put their money in different areas. So for those that are interested, then you have a long conversation, you have a coffee, you have a lunch, whatever it may be, or they come to your meetup. So, in the beginning, well, I'll speak for me. It's hard to, I guess, talk to people about it when you haven't done anything, and you just got to get over that hump. Quite honestly, you just got to start talking about what you're doing. And for me, people trusted me because of my previous successes in other areas of running businesses and whatnot. But you gotta get out there. You gotta be, a thought leader, and whether it's a podcast or a meetup or whatever, but to carve out an area for yourself that you're speaking to other people and teaching them, and you're gaining more confidence on what you're doing. But you got to get out there and allocate a lot of time to meeting other people.
Absolutely. Yeah. Big takeaway there. Awesome. What's kind of like a typical work day? I know you're running the businesses, you're building the brand, you're running all these multiple meetups, looking for new deals. Take us through like a typical day, and do you have any special morning routines?
Yeah, no day is the same. And I kind of like it that way, quite honestly. A lot of times I'm doing triage, like what is the most important thing I need to do? And it'll change. Like there are days in the last month, when we were closing the 120 unit, like I went backwards. Like I had like things I needed to do, and my list only grew at the end of the day, just because we're dealing with, fire alarms, quite honestly, But yeah, morning is important to me. I'm an early riser. I've always been. I'll read the local paper on my iPad in the morning, and then get some exercise. I play beach volleyball twice a week in the mornings. On days after that, I live close to the beach, so I'll go for a walk, like a 3-mile walk just for recovery. I'll try to get to the gym, once a week, at least to just work on my core and some other things. But I'll stretch like that morning. Yeah, I've exercise is so important. Have a protein shake, and just get started early because I'll get by noon I'll get what most people do in a day. So I like to start early, and try to meet. I work out of my house, so I'll try to meet people for lunch. And whether we talk real estate or whatnot, just do that afternoon, just a little break is important too.
Absolutely. With all the success and all the kind of the things that you guys see for the future, what do you can say is that you're most grateful for?
Family, always. I recently had a big birthday and had a big party here, and it was great to, have everyone come on out, and just good people in all facets of my life, and seeing everyone, like my volleyball friends, hanging out with my real estate friend, just everyone intermingling, and that was really special. Family, friends are, so important, to me.
Absolutely. So yeah, for your company, Break of Day Capital, how do we get in touch with you guys?
Yeah. Hit me up on social media. Gary Lipsky, Lipsky on Facebook, on Instagram, www.breakofdaycapital.com. We do a lot of webinars. So if you go onto the website and email me, I will send you out some of our most recent webinars on tax benefits. And I'm also on LinkedIn, so I love connecting with other real estate investors.
Beautiful. Gary, it was nice speaking with you. Again, like I said, love learning about kind of the growth of your business, and we'll definitely be following that. We'll make sure to have all those social media links in the show notes. And again, thank you so much. We really appreciate that, and enjoy the rest of your week, and we look forward to connecting again soon.
My pleasure. Thank you.
All right. Take care, my friend.
Thanks for joining us on this episode of the Wealth Through Real Estate Investing podcast. Don't forget to subscribe and leave us a review on iTunes or the listening platform of your choice. Also, please check us out at DwaineLClarke.com, as well as find us on Facebook for more useful content and resources.